Good morning. Welcome to the weekly open video for this week. I'm going to go over because I want to talk about this bear flag that I put out on X. I think it was last week. I want to go into detail about it, whether I think it's still going to play out or not. But also this week is FOMC week. So it could be a bit of a difficult week simply because FOMC tends to bring volatility. So don't expect normal price action this week. It may require some patience, but I'm going to go from daily time frame all the way down to small time frame for day traders in this video. So if you're new here, welcome. If you're returning, welcome back. I'm Annie. This is Trade Travel Chill, and we're going to get straight into it. I'm going to show you the trades that I am currently in right now. We'll talk about them and what my personal plan is as well. But I want to break down, as I said to you, this daily time frame bear flag, because here's the thing about it. To me, it was very obvious, and this is what I was watching out for a while ago. And right at this last touch, we open new short positions. So far, those shorts are playing out and the bear flag has broken. Well, let's talk about pros and cons for our short. The pros are that we've had multiple rejections here under the daily time frame 50 EMA. So that is bearish confluence and a good sign that, we should eventually reach our final targets, of which I have two. So one is back at the last low from 21st of November, somewhere between about 79K to 82K. And then the second one is somewhere here at around, say, 71.5 to 75K. Okay, both of those are possible at this point in time because there is a load of liquidity in both of those ranges and they just technically make sense as targets. And we have 50 EMA bearish rejection. It kind of all looks good. Where I am continuing to take this trade, but also daily checking for reasons why I should change my mind, is the fact that once a retail pattern, like a bear flag like this, once it breaks and retests, we should then see momentum to the downside. Why we should see that is because, like I said to you, this is a typical retail pattern. So traders who are taught the very, very basic way of trading, they're taught with a bear flag that you let it break, you let it retest. That's where you open your short positions and then you expect whatever target. So that means at the break and retest here, we should have had a lot of retail shorts pile on, but we haven't seen that move down with momentum. So there is a part of me that is now just waiting for evidence that that may not actually play out to my final targets. And like I said to you, the trade is not currently invalidated. So I'm still currently short, but I'm just being very, very aware and not being emotionally attached to my trade idea that it definitely has to break down to these lower levels, especially with FOMC. We don't know what's going to come out. And I also don't believe that there is an FOMC next month. So being a daily time frame, this is a couple month analysis where we could continue to just trickle like this for a month or two until we end up at those final targets, or something could change. And so every day, whether we're trickling down or not, we need to be looking for reasons why our current trade is invalidated. This is what always helps me take profit. If I am in a position one way, let's say a short position, I'm always looking for a reason to go long, because if I can find the reason to go long, it means I should close my short and take profit. And that's how I remain unemotional about trading, quite frankly. So anyway, let's now go down to the 4 hour. So lower timeframes are going to help us to find that evidence of whether or not we should be changing our mind. So on the 4 hour time frame, we definitely have a level 1 drop through here after this half Batman formation, which also coincidentally was formed after a level 3 rise. If you understand the TBD system, you will understand what I just said. If you're new here, it was probably another language. Don't worry about it. Just stick with me. In time, it will all make sense. Moral of the story is this was the right spot to be looking for a peak formation high. We got it. We consolidated. The expectation was a breakdown. And that is why we ended up getting the short position, because this, what you're seeing on the 4 hour time frame, when you go back out to the daily time frame, it was these candles right here that touch the top of the bear flag. That's why we were able to get a very good short position. And I actually posted about it in Discord at the time. I said, if you watch my video above, you couldn't get a better entry for a macro short. This trade has big potential to turn into a very big trade. Don't freak yourself out if you got a good entry. Give it a chance. for those that took the entry with me, there's a potential for this to turn into a 50-to-1 risk to reward trade, best case scenario, if it plays out to my second target. So this here is the trade at the time where we took that short. So yeah, it's worth holding on to at this point. But like I said, looking for evidence of a reason to change our mind on it. So back to the 4 hour, after that peak formation, I'm seeing that we have a 4 hour level 1 drop. I believe I covered this on YouTube, but I may have only covered it in Discord. So I'll just go over it again. When we were consolidating here, I said, if you didn't catch that short, the next best thing is going to be price returning to this area of interest, because it would have been around the 50 and the 200 EMA. That's going to be your next best area to get a short position. We had a very fast wick into that zone, which would have been tricky to get unless you were live at the time and able to market order, or you had a limit order just in the zone at the time. So that's that. And that would mean that now we would be expecting the 4 hour level 2 drop to happen, which would, if it did happen, would likely break down below our trap trader zone and then make its way to our daily time frame targets. Okay, so all good. As far as I'm concerned, the 4 hour time frame is confluent with the daily time frame trend direction. And that means we have to go down even further. This is why I'm a big fan of multi-time frame analysis. And I know that a lot of traders will tell you to just pick a time frame and stick with it. I don't believe that. I don't personally believe that you can get the full picture just from one time frame. So I'm always starting zoomed out and I work my way down, and I'm looking for confluence in the trends on every time frame, because I always want to get the big trade. I don't necessarily want to get little trades every day anymore. I used to be that much of a degen, but I'm not anymore because I've got other things to do with my life. But anyway, so I won't really go too much into the prior TA, but what we can see here is that the false move that begins the week. Now, let's talk about this, because if you understand the concept of the false move week beginning, it is traders getting trapped into sideways consolidation throughout a weekend, and then the market maker makes a move one way when the market is about to open or when it is open, and that move is called false move because it's designed to stop out the weekend traders who were not able to take profit because price only went sideways and never hit their take profit, but also didn't hit their stop loss. So they're basically just in stuck open positions. And because they're stuck, the market maker has them trapped, and then they issue the fast move and they take them out. So this is how we usually see the week open, that we have a move in one direction, and then once that has fulfilled its purpose, we will see it move the other way. Now that can happen in Asia session, UK, US. It can also go into Tuesday before it happens. So it's the opening week kind of move. Now this week, the reason why it's a bit tricky, well, it's not tricky because it still worked this week, but my personal trading rules, I will tell you, is that if the weekend trends and doesn't consolidate, I don't try to catch the false move trade, because if you're aware of this false move, you can trade it. You could have traded that little move right there as a day trade, a scalp even, if you're aware of what to look for to anticipate that it's going to happen. But this is much easier to anticipate if the price simply goes sideways on the weekend. And when we really zoom in on the weekend price action, which is this whole area right here, we can see it wasn't sideways consolidation. It was in a trend basically to the downside. So anyway, that's just part of my rule. When I see that, unless the trade is very obvious, I just don't trade the weeks open. Now, guys, make sure you stay with me to the end of this video, because I'm going to tell you something about this channel moving forward. And I want to give you a heads up, because otherwise it'll be a bit like, what is going on? So yeah, just stay with me till the end. I'm going to make sure that this is jam-packed with value and doesn't drag on for too long so that you can watch the whole video. So with that in mind, we can see the false move did still happen this week, and then Asia had reversed it. Now let's go down actually, because I tell you what, I think that I am so blessed by the powers that be above. It's just not even funny. I want to go down and show you the 5-minute time frame, because I want to show you that pivot. So this now is that move that we were just talking about on the 5-minute time frame. And you can see here that towards the end of the weekend and then into the dead gap zone, which is the 3 hours before Asia opens, we got a W formation. Now this in my time zone was 3 o'clock in the morning. Would you believe that at 3 o'clock in the morning, I had a false fire alarm go off in my apartment and wake me up And for some strange reason, I fell asleep with the chart open on my phone on my bedside table. So when the fire alarm woke me up, the first thing I saw was the chart and the W. I took a long position at 3 o'clock in the morning. I don't normally do that. I normally have a proper setup and everything, but this was a level I was expecting. So price actually came to 86K. Now on Sunday nights, I always do an update for my community telling them how I think the false move might play out. I set that for them and then I go to bed because I'm not trading it, but I have a global community and there will be a lot of people that are awake on that time zone that want to trade it. So I give them a bit of a heads up. And what I said here in my update, without the presence of good news, I think Bitcoin would be better off taking the 80 to 86K region first before any significant pivots. Not saying this pivot that happened this morning was significant. It's not yet, but the zone to look for it was 80 to 86. And that is exactly where price went. So when I saw it at 86, I knew that number in my head from the update and I just decided to open a long position. So at this point in time, that's working, but it's on a 5-minute time frame. And what I'm looking for now is evidence of the next sessions to prove this move. So UK is open at the time that I'm filming this, and it's starting to trend downwards after spiking above the initial high of the day. I would expect that. Let's just count this out. This true here is a 5-minute rise. This is another 5-minute rise, and this is a 5-minute rise into a rising bearish wedge. It is a reversal signal, but it's a reversal signal on the 5-minute that could lead to just a higher time frame, higher low. This is where you have to intertwine multiple time frames. And so what it means is that all of this section here and this section right here at this point in time has the potential to be creating the left side of a W formation, what may be a W formation. So it hasn't happened yet. And this is what you need to be watching out for if you are looking for a trade over the next couple of days. So that whole 5-minute structure looks like this, the potential left side of a W. We've taken the Asia high liquidity, perfect. If we come back, it's coming back slow so far, which is also perfect. But if we come back now and let's just say we hold above the initial low of the day, so that price is at about 86.7, especially if we hold this green vector, that's going to create a 15-minute time frame higher low. And that could mean that we head up for the first part of this week, potentially into FOMC. So if I was looking now for higher time frame long positions, that is what I would be looking for. So basically, as long as these trap traders stay trapped, we're good, right? So if we don't get this higher low, and we may not because we can't expect a typical week this week, again, because of FOMC. If we don't get that higher low, then we would expect that we're going down further and that this was just part of the false move to open the week before the rest of that daily bear flag potentially plays out. I am also looking for this to happen to open some new bots. So when it comes to trading like this, I'm a very aggressive trader. I will get my personal trading positions on 5-minute M's and W's. But when it comes to trading bots, I want to look for a range. And so they come next. So I get my trading position first and then I look for bots. Now, if you're interested in trading bots and you don't know how and you want the education, I do have a 100% free course that you can do if you need it. The link is in the description down below. You can just go to the website from that link. And if you scroll down, this will tell you how to get access to that course. By the way, this is under an hour course. You'll know how to do everything. But by getting access to it, you also get access to the bots that I set up if you want to see what I'm doing. Now, you need to join Pionex in order to do that. So Pionex link is in the description down below. And if you do that, you can also get these USDT bonuses depending on how much you deposit. And you can use the bonus to try out your first bot, which is really cool because it's like not using your own money to test out the platform. So that's really, really awesome. So check that out because you want to be prepared in advance. In accessing the course, you will also get access to the Discord channels where I share the bots that I'm personally doing. So you can just follow along with what I do if that's of interest to you. So that's what I will be looking for if this W confirms. I'll be looking to set up bots because my trades are kind of okay at this point in time. If it invalidates, you won't hear from me and I won't open any bots. So let's go and check out what else Jared has in store for us this week. So Jared has notified the community about the FOMC. Friday is also the last trading day of the month for TradFi. That can cause volatility. Monday, we have durable goods orders. US economic growth metric can often cause price volatility, end of UK into US session open. So that's today. That is a warning for today. Then Wednesday, we have the FOMC, most important news of the week. The market expects no cut. Powell only has 3 FOMCs left as chair and is recently under investigation for lying under oath. Market likely expects a hawkish Powell. And then Friday, we have PPI, CPI. We have US public company earnings, continuing with a lot of Mag 7 tech companies reporting that could cause volatility for the US stock market, and that would overflow into crypto. Okay, so that's basically my thesis. Now, if you go and have a look at Ethereum, just to show you one alt, it's the same story, so I won't waste your time going through a million different altcoins. It's the same story. You can see here all the liquidity that I had marked on this chart prior to the false move that started the week, and just have a look at that. It magically took out the very bottom liquidity that was at 27.85, gave the W formation, and then started its move to the upside. So we're looking for the same confirmations on everything. Now, let me just quickly tell you what I'm planning for this channel. I'm going to have a bit of a rave and a bit of a personal talk with you, so bear with me. You guys know, if you've been watching this channel for a while, that I'm fairly inconsistent. I'm going to admit it, I know it. And that's because I don't necessarily consider myself a content creator. I consider myself a trader and a business woman. YouTube is really here just to give on the internet what I can, because I truly believe that I have a trading strategy that works. I truly believe that. I know that there's a million trading strategies out there. There are many that are amazing as well, but I've been using this one for many years. It's worked for me. It's made my life what it is, and therefore I want to share it with people. But I tell you one thing that genuinely has held me back for so many years from doing regular content is this stupid algorithmic play of needing to come up with compelling titles that will grab your attention and fear or greed inducing thumbnails that are going to catch your eye. I'm over it and I don't want to do it anymore. I don't want to be part of it anymore. I don't want to even have to think about how am I going to stand out amongst other crypto channels. But I truly believe, and I would love your opinion by leaving a comment down below if you agree with this, I believe that the crypto market is exhausted by it anyway. And I feel like I am a master of technical analysis, and that's all I want to share as well. And so I'm done with it. So the moral of the story is my titles from now on are going to get very boring, and they're pretty much just going to tell you what they are. As in, today's is probably going to be Monday market open, something like that. It's literally going to be that simple. And in doing that, because you guys have been watching me for a while, I would assume we're mates here, there's not really anyone new coming in, but I would assume that you understand if I'm doing a video on Monday, it's probably the market open. If I'm doing a video on a Wednesday or Thursday, it's probably the midweek reversal. If I'm doing a live stream on Friday, that's usually my chill time to hang out with you guys and do higher time frame analysis. So that's all my videos are going to be from now on. I'm not going to do clickbait titles. I'm not going to try and do fancy thumbnails, because those are the things that stop me doing content altogether. And it's just going to become very boring and just telling you in the title what is discussed in the video. And for that, the algorithm is going to punish me for a little while. It's fine. I don't even care. Like I said, I'm not playing the algorithm game anymore. I just want to share my knowledge with you, and that's it. So that's what's going to be happening moving forward. I just wanted to give you a heads up, because you're going to start seeing every Monday market open, and you're going to be like, she used that title last week, So anyway, that's it. If you enjoyed this video, if you learned something, please smash that like button, because it really does help get the video around. And if you are not yet subscribed, consider subscribing, and leave me a comment down below and let me know what you think of these clickbait titles. Are you over them as well?